Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a failure at the 92.75 to 94.75 resistance zone, followed by some selling down into the 79 area. At this point, heading into the open, we know that the sell side is more dominant on the smaller time frames, but at the same time, ES is set to open near support. So right off the open, we need to see whether there are real-time signals supporting the idea of continued liquidation and continued selling. So if we open and the NYC tick is sustaining below zero, the advanced decline is quite weak and continues to get weaker, and the other markets are also selling off, then that could set up a environment where the market can go down to 73 quarter to 75 quarter and potentially even break that zone. Now, the initial support zone today is also going to serve as the overall bull bear zone. So if you break 73 quarter, 75 quarter, then that can result in continued liquidation down into the 64 half to 66 half zone and possibly even lower depending on the relative volume and whether we're getting enough volume on the day time frame to support a wide range move all the way down into 56 to 58. The next major inflection point below 73 quarter is 56 to 58, but at the same time, we also need enough volume to really drive the market lower if we break 73 quarter, 75 quarter. So off the open, the question that we'll be answering is whether the market is showing signs of directional movement via a very weak and consistently holding below zero NYC tick. The advanced decline is set to open on a weak note, and that's a given, but then does it sustain those lower values and does it continue to go lower and trend down? If that's the case, then we know that we're in more of a directional market and the sell side is in firm control on the smaller time frames, and then the focus can be more on short setups and we'll be cautious on the long side. On the other hand, if we open and the momentum is fairly two-sided, the AD opens on a weak note but then starts going back up. Russell holds the 1205 to 1206 area and continues to head back up as well. Then the market can still be in a balanced environment, in which case we can get setups on both sides, long and short. But right now the market is set to open essentially in the middle of the recent range of the recent short-term balance, so it can really tip either way. Either responsive buyers can step in at 79.75 to 81.75, push the market back up to 86.88, which is the immediate inflection point above, or if we're in this directional market, then break of the 79.75 to 81.75 would be an early warning sign, and that can eventually lead to a break of even 73 quarter to 75 quarter. So that's the environment we're currently in, and those are the questions we're going to be answering off the open. If the market holds pre-market support, then there's still potential to go back up. Responsive sellers can be active at 86 to 88 on first test. If we are able to go through the 86, 88, at that point, the market has potential to go all the way back up to 92.75 to 94.75. We would have to see a break above 86, 88 to shift the short-term control from the sell side, as we've seen in the overnight session, back to the buy side. So right now, heading into the open, the immediate control is on the sell side, and a break above 86.88 would possibly change that and then open the door for a test of 92.75 to 94.75, and then if there's enough momentum, possibly higher. But right now, those are the key resistance zones, and right now the focus is going to be on how the market behaves at this 79.75 to 81.75 area. How it reacts to the zone is going to provide a pretty nice heads up on the directional bias for the day. So those are our main thoughts. Let's see if the buyers can hold up 79.75 to 81.75, and we'll take it from there.